Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Russell 2000 index, and that's ticker symbol RUT. And as I do each and every week, you can see I left my lines on the chart from last week's report so you can see how the forecast is working out. And while the end of that line is my target, you can see that the Russell 2000 is starting to head lower. This is a very long red candle, and if you look down below here, you can see that the stochastics oscillator is crossing today with a sell signal, and yesterday the CCI crossed with a sell signal. So my forecast is still in place. I'm just going to move that line over to the right. And just like that, actually I'm going to extend that just a little bit further because I'm going to leave the end of that line as my target right there and erase this line. So stay tuned to the market guys so you can see how these forecasts work out. Now if you're still long the market or long any of the stocks that are part of the major indices, the best thing that I can tell you right now is that the charts are telling us to trail our stops up. So in other words, if you have any profits, protect those profits. And if you've bought stocks on these highs, then you definitely want to manage risk and limit that risk on the downside. So I'm going to leave the Russell 2000 just the way it is till next week. Now, one other thing. Today we set a higher high, but we have a lower low. That's known as a half signal. And while we did set a new high, the CCI continues to go lower. So that's known as a negative divergence. Right? So you want to keep an eye on that CCI because that really is a good leading indicator for how the market is going to respond to these technical signals. Now, speaking of leading indicators, the VIX, ticker symbol VIX, that's a leading indicator. That's a contrarian indicator to the S&P. And I said that the VIX would rally, and here at the end of the line being my target price is still in place. You can see that there's a buy signal on stochastics. The CCI is heading higher, just ready to cross over that black line, which is the momentum line. So the end of that line is still my target. I'm just going to move that on over just like that, saying that even though we have a shortened trading week next week, I think we're going to hit that target on the VIX. Now again, it's a contrarian indicator to the S&P, so let's look at the S&P. Interestingly enough, the VIX was higher, but so was the S&P on today's high. And even though that's a higher high, notice what's happening. We have a sell signal on the stochastics, and the CCI is starting to head lower. So again, I'm just going to shift this on over to the right, with the end of that line being my target. And again, we have a shortened trading week next week with New Year's holiday. That also leads to lower volume, and with lower volume we tend to see a lot of the professionals start to push or lean on the market in an effort to really make a profit with their positions as they more or less manipulate the market on low volume. Now if we look at the Qs, ticker symbol QQQ, you can see same story over and over again. I'm just going to shift this on over. The horizontal line that I have right here, right at the end, right there, is my target price, mainly because if I zoom in, you will see that that horizontal line is a gap fill support level. So this is more or less a 2-week forecast because, again, next week we have a shortened trading week, so we're only going to see 4 candles here. And then there's enough room for another 5 as we follow into the new year. Notice one other thing is that this red candle is showing up on higher red volume. So that's telling us the sellers are becoming more motivated. Now let's look at the diamonds, ticker symbol DIA. Again, same story repeats. We have the stochastics is heading lower while we had a higher high on the diamond. So don't be fooled by these record highs that you're seeing right now, because this could be very short-lived as the market moves through a correction. Now I'm going to leave a 2-week forecast right there with the end of the line more or less matching what I had for last week, so I'm going to erase that. Notice down here, this is a gap fill support level. 80% of gaps fill. And if you'd like to learn more about gaps, go to themarketguys.com, click on the video tab, and there's a video there that will teach you about gap trading and that 80-20 rule for using gaps as a trading strategy. Now finally, OUSA, this is a fund that I've been tracking. I said that we would most likely go lower. I'm going to again extend this out with the end of that line more or less matching my line right here. I'm going to erase that right there, remove that drawing. This is a gap fill target, and that could act as a support level, but I'm going to say that that will eventually break down because there's another gap down below the market here. So pay very close attention to gaps. You can see that the oscillators are starting to roll over. The stochastics is rolling over, heading lower. The CCI today crossed with a sell signal. And if I zoom in just a little bit more, you can see that this candle right here is a small bodied candle that falls within the previous body of the green candle here. That's known as a bearish harami. That's as bearish as a bearish engulfing pattern. So make sure you trail your stops up, make sure you protect any of those profits that you have, and most certainly make sure that you protect against downside risk. So that's it for now. If you're a Oracle subscriber, whether it be through the equity Oracle or the option Oracle, I did not put any buy alerts out because the market is more or less hanging right now, and I want to make sure that the odds are in our favor. So I may put out a trade alert over the weekend, or I may just put out 2 trade alerts next week to make up for this week. So stay tuned for that. If you're not an Oracle subscriber, just go to a Market Guy website and you can look into that. We have a trade alert service that goes out every week, and we have a lot of very happy clients. So have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our trade alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.